Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 13th of February 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off as ever with a look at the overnight changes and price moves to be aware of. And really, it's a story, I should say, of pushback against the US dollar, led largely by the Australasians, the Aussie dollar, and most significantly the New Zealand dollar here. As you can see, the Aussie up by 0.57% overnight against the US dollar, with the Kiwi storming away, adding 1.68% shortly before we recorded the video, and trading at 68.47.40. And we'll look at the reasons behind those moves a little later on in the video. There were also gains for the Canadian dollar and the Mexican peso, up by around 0.21 and 0.18% respectively against the US dollar. The Brazilian real also stood out, taking 1.27% off of the dollar in yesterday's session and reversing the trend of recent days where the dollar had been on the front foot. Dollar index for its part, unsurprisingly, back below 97, trading at 96.65 shortly before we recorded the video. Okay, what's on the calendar then? Events that may move the markets. Well, we've already had the interest rate decision and rate statement and press conference from the Reserve Bank of New Zealand. That was out at 1 a.m. and 2 a.m. respectively this morning. And again, we'll look at that momentarily. To come then today at 9:30 GMT, we'll have a raft of inflation data out of the UK, retail price index data, producer price index data, and consumer price index data for the month of January. A top-down and bottom-up look at inflation rates in the UK there then. At 10 o'clock, we'll have Eurozone-wide industrial production data for the month of December. Recent German data and Italian data of these numbers, of course, has been disappointing. There was better news in France. Let's see what the Eurozone average looks like. Then we'll pause till 12:15 and then cross over the Atlantic for a speech by the Fed member Bostic. At 13:30, we have inflation data out of the US with the release of consumer price index data for January, both inclusive and exclusive of food and fuel. At 13:50, we'll have the second of the day's central bank speakers. This time it's the Fed's Meister, who will be stepping up to the podium. At 1900 then, GMT staying in the States for the monthly budget statement from the US government for the month of December. And then a pause until 1910, when we will hear from Reserve Bank of New Zealand's Governor Orr, who will be speaking then. Interesting that he should speak so soon after the interest rate decision from the Bank of New Zealand. I'm sure the market will be all ears given what was said at that meeting. And at 23:50, to round the day off, we shall have gross domestic product for Q4 out of Japan. Right, on to the headlines and breaking news and comment that's caught my eye overnight. First of all then, the Reserve Bank of New Zealand kept interest rates on hold and dispelled rate cut fears, saying that new data indicated that its next move, when it comes, which won't be until 2020 or later, the bank said, could be an upward move, and hence the big move higher in the Kiwi. Donald Trump is considering extending the 1st of March deadline for trade talks with China, says the FT. Progress has slowed somewhat there, and it seems as though an extension could be granted. Meanwhile, South Korean unemployment has jumped to 4.4% in January, up from a read of 3.8% in December. The January reading was the highest level seen in the country for 9 years, so quite a big jump and quite a significant deviation from the prior read. And the Bank of Korea there will be considering what action it needs to take. Meanwhile, the EU has added Saudi Arabia and Panama to a list of high-risk countries whose financial transactions are closely monitored. Remains to be seen if that has any effect on overall relations with Saudi Arabia. Okay, time for food for thought and something to take away with you into the trading day and beyond. And why not think about this? We've just seen the publication of the Bank of America Merrill Lynch monthly fund manager survey. This chart extracted from that survey caught my eye. Fund managers get negative on the global growth and inflation outlook. Fund managers were asked, how do you see the global economy trend in the next 12 months? There are a variety of potential outcomes. The one that we're interested in is, do you see below trend growth and below trend inflation? And that's this red line here. That had been trending lower until mid 2017, picked up slightly across 2018, but to now 55% of fund managers believe that we will see negative growth and a lower inflation outlook for the global economy over the next 12 months. These fund managers, there were 218 panelists in total in the survey, managing $625 billion worth of assets. So what they say certainly counts for something. So very interesting to see them being bearish, although they're not yet calling for an outright recession. Okay, risk warning time. Please take a moment to read this risk warning thoroughly. Trading CFDs and foreign exchange on margin can be a risky business. If you're unsure about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative, and do take the time, as I say, to read this risk warning thoroughly. Thank you for your time today.